This is the Growth and Value Podcast, empowering and inspiring stock investors, helping you take control and make a difference with your investment dollars. Looking for quality stock tips? Well, we may or may not be talking about Apple. We may or may not be talking about Google. We may or may not be talking about Disney. However, since we use our proprietary algorithms to screen, analyze, and rank over 6,000 stocks every week, we will be talking about timely investment opportunities. So you may often hear the name of a company you haven't heard of before, and you know what? That is often the best kind of opportunity, an opportunity to get in early before the investing masses. The Growth and Value Podcast is made possible by Connor Management Group, a registered investment advisor firm. Hi everyone, Mathis Connor here with Connor Management Group, and this week we're going to look at the best growth stock to buy right now. Today is Tuesday, February 10th, 2015, and here on the opening slide we see that this company is in the wireless communications industry, and we see its 6-month upside potential at 21.3%. On to the second slide, we see that the name of this company is called America Mobile. The ticker symbol is AMX. Once again, we see this ticker symbol at their ticker symbol is at AMX, and we see their 6-month upside potential at 21.3%. And for those of you that have been listening to us for a while, America Mobile should be a familiar name. We covered this stock back in June of 2014, and we find it coming up on our list again. Here is the quick facts slide. We have two descriptions. This one is from Value Line. Let's see. America Mobile is the largest provider of wireless communications services in Latin America based on the number of subscribers, with the largest market share in Mexico and the third largest in Brazil. It also has major fixed line operations in Mexico, Brazil, Colombia, and 11 other countries. It has 270 million wireless subscribers across 18 countries and 30 million landline subscribers and 18 million broadband access subscribers. And here's the business description from Yahoo Finance. America Mobile provides telecommunications services in the United States, Latin America, and the Caribbean. It offers mobile and fixed voice services, including airtime, local, domestic, and international long-distance services, as well as network interconnection and public telephony services. The company also provides data messaging, web browsing, mobile entertainment, enterprise mobility services, and corporate network services, as well as data services such as data transmission, email services, instant messaging, content streaming, and interactive applications. So with those two descriptions, I think you've got the picture here. Basically, America Mobile is a combination of a wireless and a landline telecommunications company. The website for America Mobile is americamobile.com. That's AMERICA, America Mobile, MOVIL.com. The company is headquartered in Mexico City, Mexico. So that is why the name is not really familiar to you. It's not based here in the United States. And the company was founded in 2000, and the number of employees they have is 189,737. Also, one of the reasons why you may or may not have heard of America Mobile, you've been hearing about it more as of late, is that America Mobile is owned by possibly the richest man on the planet, may be the only guy richer than Warren Buffett, and his name is Carlos Slim. So that might give you a little more perspective and might be able to get you to tie it to some headlines and stories you've heard of in the past. Going on to the products and services slide, we have a picture of the America Mobile logo, and we also have an excerpt from one of the investor presentations that says operations in 18 countries in Americas, more than 265 million mobile customers, more than 31 million fixed lines, 19 million fixed broadband accesses, more than 19 million television subscribers, coverage for a combined population of 852 million, state-of-the-art products and quality services. So while they're headquartered in Mexico, actually they have a footprint of operations throughout Central and South America. We have a pie chart here that shows the source of their service revenues by business. 27% of their revenues come from wireless voice. 35% of the revenue comes from wireless data. Let's see, and 16% of the revenues come from wireline voice, and 13% of the revenues come from fixed broadband. And back to the geographic footprint, 25% of their revenues, or accesses, I should say, is from Mexico. So 25% of the business from Mexico, 29% is from Brazil, and 9.5% is from Argentina, and 9.1% is from Chile, Peru, and Ecuador. So that gives you a feel for América Móvil's footprint. Their business headquartered in Mexico, but they have a very strong business footprint throughout Central and South America. On to the metrics slide. The annual revenue for América Móvil of the last 12 months was $55.6 billion, quite a sizable company. The net income of the last 12 months was $4.1 billion, and the cash from operations was $15.5 billion. The operating margins for 2013 were 33.2%, and for 2014 it's tracking to be 32.0%, a slight decrease. Onto the valuation metrics. The trailing PE ratio for América Móvil right now stands at 16.4, and the forward PE ratio stands at 10.8. So basically that implies that analysts expect earnings to increase significantly over the prior year. That's reflected in a PE ratio that moves from 16.4 to a forward PE ratio of 10.8. That is a significant percentage decrease in PE ratio, and therefore a significant percentage increase in earnings. The PEG ratio is at 3.3. So it's a bit rich, not too much. The price to sales ratio is at 1.4. Similarly, the price to book ratio is at 5.9. That's also a bit rich as well. And the enterprise value to EBITDA ratio is at 3.1. The dividend yield for América Móvil is at 1.7%, and the average dividend payout ratio over the last 3 years averages out to 19.7%. Onto the price chart. América Móvil, over the last 12 months, the stock has increased a whopping 2.6%, only about 3% increase, but the stock has been somewhat volatile. Basically, about a year ago, the stock was trading in the $20 range, and from there until let's say early July up until September, the stock made a strong increase up to the $26 level, and from there, from that $26 level, the stock started to decline back to where it is right now, around $21. So over the last 6 months, the stock has experienced a pullback, and a lot of that pullback is related to the announcement that Mexico is going to try to level the playing field in the telecom space by increasing competition, and therefore kind of decreasing the dominance América Móvil has in its region. So that's the main reason we can gather for the pullback in its stock price. But we still see, for a number of reasons, why we think this is a good investment opportunity at this price level. On to the next slide. It's the why now, the bull rationale for América Móvil. Basically, we think that this stock is a good buy right now for 3 reasons. Despite the pressure on América Móvil to basically divest some of its businesses, as well as start to compete in a more level playing field, the company still sees its sales and revenues increasing with additional subscribers. Additionally, because the company is going to be spinning off its businesses, they are decreasing their capital expenditures at an appreciable rate. And less money spent out the door means more money for the shareholders, and that creates additional upside. And additionally, while right now America Mobile appears to be fair valued, within the year, this combination of increasing sales and declines in capital expenditures implies that it's going to have a low valuation metric over the next year, and increasingly so throughout the year. So those are the three reasons. Basically, increasing sales and revenues over the next year, declining capital expenditures, and a valuation metric that's seen to get cheaper and therefore allow an increase in price. On to the summary slide for America Mobile. The financial statement quality is excellent. Additionally, the debt the company has due over the next 5 years is at $10 billion, and they are basically earning $6 billion in profit every year. So they could technically take care of the debt within 2 years if they so chose. And additionally, the operating margin trend, while it is decreasing slightly, it is still above 30%, which is good by most measures. The price pattern trend has been decreasing over the last 6 months, primarily due to this regulatory announcements from what we can gather. Additionally, our overall market outlook right now is a bit bearish. Basically, the uncertainty in the oil market and the uncertainty in the foreign currency market is creating a lot of missed earnings as of late, and we're not sure if we've heard the last shoe drop on either front. So we're a bit bearish right now, and that's what our models is showing. The recent closing price for America Mobile was $21.68, and our 6-month price target for the company is $26.11. And for that reason, we see the company with a 6-month upside potential of 21.3%. So although America Mobile is facing regulatory hurdles to basically operate in a more competitive landscape, they still have a strong foothold. They still see revenues increasing, and they're decreasing their capital expenditures and looking to spin off some businesses here and there. And it's for all these reasons that we see America Mobile as the best growth stock to buy right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care. Bye. Hi, this is Matt Connor from Connor Management Group, and I just wanted to take a few more minutes to give you some background about myself and Connor Management Group. First of all, if you enjoyed this podcast, and I hope you did, and you have been over the past few months or so, please write us a review on iTunes and Stitcher. We really would appreciate it, and it would help us get more subscribers. So that's something we'd appreciate. So for the podcasters out there, please go to Stitcher or iTunes, and for you guys on YouTube, I'd appreciate a thumbs up and like, as well as just becoming a subscriber to the CMG Stock Picks channel. All right, well, that's what I wanted to say with regard to the podcast and YouTubers. Hey, try to be efficient. But I wanted to share a little bit about myself. Basically, I've been told from some friends and listeners that know me that I could enlighten my audience with a little bit more about myself. So I'm not all that comfortable with telling about myself. I really kind of want you to enjoy the content. But for those of you that have an interest, this is why the stuff is all the way at the end. So, okay. My name is George Mathis Connor. My background is that, I have a bachelor's in mechanical engineering from a place called Rensselaer Polytechnic Institute, engineering school in upstate New York, a master's in engineering from Cornell University, also in mechanical engineering, and I have an MBA in finance from the University of Chicago. So, hey, that takes care of my educational background. Basically, bottom line is to see, I did a lot of schooling. What my career experience has been to date, I started out my career as an engineer, did a few years of that. Worked on a lot of cool landmark renovation buildings in New York City for a few years. One of the most high-profile ones was my company, or I should say the company I worked for, was part of the renovation team of Grand Central Terminal. So for those of you that passed through there, I've spent a number of years in and out of every cranny of that building and facility. I also worked as a banker in New York after I got my MBA. And basically, I worked on financing a lot of large-scale infrastructure projects, mostly power plants, but I worked on some basketball arenas as well, and some chemical plants, and even some coal mines. I've been deep down in the ground a number of times in my career. Additionally, let's see, after that, started working on the investment side of developing power plants, and particularly I spent most of my career with a company called Enron and another company called GDF Suez, where I worked on the development of power projects where where I acted as a equity investor for whether we were going to build them or buy them or sell them. And after GDF Suez, I am now an investment manager, and basically, I've been studying deals over the years, learning to build complex financial statements, always evaluating them, the cash flows, and making sure that these needs to be profitable. And investing in the stock market was always a hobby of mine that I took more and more serious over the years. So after a bunch of time, I just, I'm really going to go after this. And so I spent maybe about, say, 3 years actually working on the development of some proprietary algorithms. I was just convinced that with my mathematics and computer background, coupled with all these financing deals, of which I became very good in with accounting and finance, I thought that I could at least find one way of consistently finding stock opportunities. So it was the development of these proprietary algorithms and me having some success with them that led me to the development of Connor Management Group and the development of all these videos and podcasts you've been seeing and hearing. And, I am pretty happy with these algorithms. Basically, they review, analyze, and rank over 6,000 stocks every week. They're pretty comprehensive and pretty thorough. The algorithms use fundamental technical analysis and also consider some macro level measures. And another thing that's pretty unique is that these algorithms estimate future stock prices with specific time horizons. I haven't seen too many people on the web that will give you a potential stock price, say consistently say this is what we expect the price to be in 6 months, or this is the price that we expect there to be in 12 months. And I think for most of the videos and podcasts that I produce, you've always heard me give a potential stock price going 12 months out. The premium subscribers actually give them a stock price for the top stock prices for 6 months out. So that's about what I have to say about the algorithms. Additionally, about Connor Management Group, our primary offering of CMG LLC is that we are a managed account service. And basically, a managed account, for those of you who don't know, is basically a more hands-on, customized way of investing for the long term. It's basically a complement or a supplement to 401k or IRA and it has more benefits. And basically, you probably haven't heard of these as much or over the years because they've just become a lot more available to middle-class investors. And that's primarily because of advances in software for being able to handle many clients and move them in and out of custom portfolios and options. So if you want to know more about our managed account business, please go to ConnorMG.com. That's www.connormg.com, or you could go to our website and you can see a presentation that compares kind of management groups side by side with other managed account providers. E-Trade provides managed account service, Fidelity does, a lot of other mainstream firms. And like we said, basically now that technology is advanced with software, it's a lot easier to manage. So basically, as with E-Trades, the minimum size of account we open, say $25,000. And while as I'd say 10 years ago or more, minimum account size was probably $500,000. So there are a lot of changes, and you'll be hearing more and more about this account service, as time goes by. Additionally, additionally, you can get to know us through our social media footprint. Basically, we have a presence on all the major websites for your convenience, and there you can get a lot more articles and hear about different points of view on things going on in the market. So we have a presence on Twitter, Google Plus, and Facebook, as well as LinkedIn also. So you can be kept abreast about thinking on stock investing, as well as things we share by others who we consider thought leaders. And finally, CMG offers two newsletters, both weekly, two weekly newsletters. One is to keep investors up to date about relevant news and provide in-depth analyses on a quality investment opportunity. And those opportunities are consistent with the free weekly podcasts and videos. And the other newsletter we provide is our premium newsletter, and that one provides the latest top picks from our proprietary algorithms that we run every week. So, feel free to go to CMG stockpicks.com, and you can go there to subscribe to the newsletters. And if you go to the website, you can also view this deck and or any of the decks going forward, and there'll be a link there to everything I've just talked about. Basically, everything from the podcast to the newsletter to the presentations about our managed account service. So, hope this was helpful. Nice overview. Hope it didn't bore you. You can listen to this a couple times. That's why I put this at the end of the stock presentation. And I'll talk to you soon. Take care. Bye.